most stocks can be put under specific labels or specific categories, right? Like value stocks or growth stocks. Caterpillar is something most people consider a value stock. Something like AMD historically has been more of a growth-centric stock in the last decade or so, right? And then I think Mondelez fits well into the recession hedge category. Why do I say that, right? Well, it doesn't perform particularly well in terms of growth, right? Over the last 5 years is actually slightly underperformed inflation. Inflation's been about 22%, although we aren't quite at a high. This is kind of at a valley, so even if we're being generous, say it's up 22%, it's still about matching inflation. However, since the year 2000, it is up slightly more than inflation. Inflation's up about 90% since the year 2000, so we're up 100%. So we beat it by 10%, but that's not enough margin for me to say, okay, this is a stock that is going to grow. It's probably not. Also, in my opinion, the dividend is not quite good enough to be put into a dividend stock at all, really. I mean, because you could buy Schwab dividend, I covered on this channel already, and it gets about 3.5% yield annually right now, and it also has over the last 15 years returned 270% to shareholders. So I personally don't really like the stock. You could put it into a dividend portfolio, but I necessarily wouldn't like it. What I like Mondelez as is a recession hedge primarily, right? Something like, it's going to match inflation, right? It's going to give you this return, right, historically. But, it'll also protect you because the underlying business does well or decent during a recession. Obviously, when everything's selling and people are, liquidating 401ks and stuff like that, which, by the way, don't ever do that unless you're, very close to retirement. The underlying business is going to do well, right? Primarily food, right? Food isn't something, unless it's a luxury food, going to do poorly during a recession, right? Things like cruises and really, luxury, what am I thinking of? Furniture, right? Stuff like that is going to do very, very poorly during a recession. Not so much food. Even if it's not the cheap of the cheap, it still should do fine. So this underlying business is going to do better during a recession, or at least it's going to do fine, right? It's not going to do phenomenal. Nothing sells phenomenal during a recession. But this stock, if any, along with a couple others, should do good, right? And you may say, well, why wouldn't I just stick to something like I-bonds, right? And there's nothing inherently wrong with that. But the return you're going to get on this is better. I mean, you're going to, because if you looked at what I-bonds is, it's going to get you 1% or so, depending, right? More than inflation, right? But this is going to get you matching inflation plus 3%. So, of course, it's probably a bit more liquid than bonds, right? I mean, it's not easy to take money out of an investment portfolio, but you can do it much easier than something like bonds, right? So it's also fairly liquid. I like that, but let's look a little bit more at some of the things surrounding it. PE, it's cheap, right? This is a stock that is under S&P 500 value, which is good because if it was above it, I'd be very concerned, right? We don't want our stocks that don't grow well, or don't grow amazing. We don't want them overpriced to the S&P, and this one is dramatically underpriced. We can see, well, not dramatically, but significantly underpriced. We can see PE 23, Ford PE 18. S&P 500 right now is 27, Ford PE 23, so it is a solid discount to it. Let's look a little bit historically at the earnings. It shouldn't be anything crazy. Hopefully we see some form of growth if it ever decides to load. Here we go. Yeah, I mean, you get 2%, 8%, 9% in terms of that's earnings per share, revenue 914. So yeah, actually revenue growth is pretty good, or the last couple years, not so great this year. But I mean, as long as you're getting some growth. And then let's take a little bit of a peek at the dividend. Yeah, so this is clearly a stock that's trying to derive more and more value to its shareholders in the form of dividend. That dividend is hiking dramatically year after year after year, and the share price has not gone up as much. So it looked like this stock probably was not paying much of a dividend a decade ago, but so you may even expect this dividend to climb more. It's that 3 to 3.5% range. Maybe we'll look at it as a dividend-centric stock at then, but honestly, if this business can't keep growing, it might have a higher dividend yield, but it's not necessarily going to drive any more value back to you, right? If it's not growing, that's just where you get it from. So you may actually sacrifice that in terms of the share price of the company itself, right? Historically, It's right in that range that it always has been for PE, between 18 and 20, and then normal PE somewhere between 19 and 25. We're right in the middle of both of those, basically. So nothing crazy there. And then what analysts have to say, actually, a lot are saying buy, which is pretty interesting, usually on a stock that doesn't have crazy growth or anything like that. But apparently they think it's undervalued, at least in the short term. Right, you could see it hit what if it rebounded to 52-week highs, 77, something like that. You could see decent growth on it in a short-term play, more as a long-term investment. So this, if you like the stock, this might be a good entry right now because we're pretty much near 52-week lows. But as a long-term investment, this thing probably isn't going to do crazy, right? I like it personally as, like I said, a recession hedge. I just don't think it does anything amazing outside of that. So that's my personal thoughts on this stock. If you enjoyed this video, I'd appreciate if you left a like, subscribe if you are new. I do daily stock content on this channel, and I've noticed whenever anyone subscribes, I often get a burst in views. YouTube recommends my content out more, and it just makes my day. So I'd appreciate if you did that. But anyways, I hope you all enjoyed, and I'll catch you next time.